13 April, Thursday, guys. MAU of Cal once again. All right. Thanks, Biden, for it right now. Yes, indeed, because we're going to suffer from our high petrol costs again. Because US crude is going to hit $96 very soon, and it's just going to be happening. All right. Now, many people are saying that, no, Cal, if you're going to expect recession, we're going to see crude oil coming down, right? Nope. If you remember what happened back in 2011, you know that how crude oil price shot up back then. So all I can say is this. Stand by, guys. All the drivers, be careful because crude oil price is going to surge. All right. Thank you, Biden, once again. All right. So I'll tell you more about details shortly, but let's just have disclaimer apply as usual. And thank you, Ames, for the kind sponsorship. All right. First of all, remember this guy, 19th of April, we're going for the Omakase Lunch. 4 packs will be invited, and the place is at this Golden Mile Tower. This place itself is pretty good. I saw the review is pretty amazing. So we're going to go for that. So this coming Saturday, we're going to be doing the Spin the Wheel Lunch with Cal segment. So if you think that you want to join me for the lunch, then you just need to do this following. Just go and watch my video and leave comment like this. All right. Thank you, Joe Lu, for the great comment. You did mention that the S&P 500 may go down first, and then after that, it shoot back up before crashing down. Okay, not too bad. I follow you. Now, everything is possible. Let's see whether 3,900 stays. And JL, very good information. You says that, right, look at the BTC monthly candlestick. Seemingly, there's a rough pattern. Okay, all right, let's see whether it happened. And I think that is something truthful. So that's why I feel that the BTC will not come down so soon. But the thing is this, one is to sell. I think it's time to short the Nasdaq hard. Okay, and you share with me the ratio of the copper and gold and oil and gold ratio, and it's a precursor to PPI and CPI. Okay, can you share more on that itself? I think roughly got your point, but I would just love to hear from you directly. All right, so thanks again, great sharing, right? Okay, not only that, we have people sharing about another video about this SFA going to import certain insects. Yes, I think that would be lovely. You know, I really love the China, the silkworm that I tried back in China. It was amazing. It's nice food though. It's going to stun a lot of people. And of course, guys who actually, I realize that people who actually watch this could be Chinese ad. And 很好的分析. Thank you, T Wong. All right. I wrote back to you. 谢谢您的赞赏. All right. I will continue to do my good job, and I hope that you can continue to support us. Once again, appreciate it. Yeah, this is written by me, actually. Okay, guys, just have to watch my video and then put a comment. Okay, that's all you need to stand a chance for this coming Saturday. Thank you once again. All right, now Singapore property prices have been saying that it's expensive and expensive and expensive. And you can see right now, the private residential property surged by almost 30% year on year in 2022. Now, this is crazy because it's going back again to 2007 level. And we all know what happened later on. I mean, seriously, this is a repertoire. But the thing is, the difference is right now, the interest rate is at high level. We have the wages not following through, and the property prices is going up at such a fast speed. And this is not like the same, you know, because back then it's based on percentage, right? So the thing is just in 2007, the property may be worth 1.2, 1.4 million, but today itself, it could be as high as 2 million. Geez, I don't think that, you know, our wage have increased that much, right? So all I can say is this, even expats are feeling the hit right now. And of course, the question is this, all right, would that be a relief? I really don't think so, unless it's basically a recession coming in, and that will pull back everything. But you look at it right now, right, there's a lot of reason for this price going up. It's about confluence factor, like about Gen Y and Gen Z. They want to move out from their parents, they stay alone. And of course, we all know that during the pandemic, a lot of people come to Singapore because it's like a safe haven. And of course, it's also the stringent measurement in China and Hong Kong, right? That's all the reason here. But whatever it is, guys, they come in, we accepted them. So we have to accept that the price will keep on going higher because we're just a little red dot, right? So all I can say is, if you want to, like, you know, stay in a good place in the high rental and high cost, you just have to work harder or trade in the market, right? All right, let's look at what happened last night. The US market, the Dow actually was up initially, but after that, it came off down by 38 points. And the Nasdaq down by 115 points. All right, so the S&P dropped below the 4,100 mark once again. Okay, so what actually happened? Well, basically, the CPI data was better than expected, even pretty good. So the market actually went up first initially. Then after that, right, we have the Fed meeting. And when the Fed meeting minutes, when it came out, right, wow, direct words, okay, the official fear that the economy could tilt into a mild recession. later this year in the wake of the US banking crisis. Now, this is something that I have been saying, repeating like a broken recorder for the longest of time. And of course, I got a lot of people feedback to me and say that I'm too bearish, but now you can hear it's from the Federal themselves, okay? And the thing is this, according to the Richmond Federal Reserve President Thomas Perkins, he says that we have a long way to go for inflation to come down. And even though the CPI data shows a 0.1 increment, but if you look carefully, the numbers are not really speaking the truth. I'll tell you more in details very shortly. And of course, this week we have a lot of earnings coming out from JP Morgan, Wells Fargo, Citigroup, and of course, United Health. All right, these are all the very heavyweight Dow component stocks. So we would like to see whether the Dow can hold up, right? Okay, let's talk about the CPI data first. Now, the CPI data really came out better than expected, rises 0.1 in March as shelter price increases. So it's still staying about 5%. Now, this is still very far away from Federal Reserve. What they want is 2% inflation. So if you look at it, they have to increase by at least to 5.5. That means that for May itself, another increment of interest rate and one more probably later. So to me, a 5.5 should be the level. Then we may go for a pause for a while. But if the market, the inflation figure keep on going up instead, then it may go to as high as 6, and something that I've been saying for the longest of time. And I trust that if crude oil goes up, 6 is not too far away. So you can see right now for the 10th month, yes, the number is coming down. We are having a better time. The highest was 9.1, remember? Now we are about 5, so it's about 6, sorry, it's pretty okay. But the thing is this, where 6 itself is still very far away from the 2% that the Federal Reserve wants. So the thing is this, if you really look at it right now, from 9.1, it was 0% interest rate, and today itself is 5% interest rate. So you can see that it's pretty clear, right? The interest rate is needed to bring down the numbers. So all I can say is this is not going to go well. Why? Because of this. Take a look. Now you can see that right now the real wages continue to decline, and now it's the 24th month. Now this is it's really the one of the longest period whereby the wages continue to decline. That means that people are not really having the means to support themselves, and there's a lot of them goes for credit. And if you go for credit and the interest rate goes higher, the cost is escalating and the earnings is not there to compensate, that's going to be a big problem. It's just a matter of time, things can go very, very bad. And of course, you can look at right now, there's some comparison saying that the M2 seemingly is a very good indication of the CPI and the PPI data. Well, look at it, it seems to be really relevant that the M2 seemingly is leading the CPI and the PPI. But the thing is this, that is based on the fact that from 2017 to 2022, whereby there is no problem, no interest rate issues, no high inflation issue. So I can only say this, we all know M2 is lowering. So if M2 is lowering, that is trying to basically suck out the liquidity of the economy, and that will actually bring down CPI data, because less and less people get involved in jobs, so earnings and growth will come down together at the same time. But the thing is this, if this really happened, oh my God, you can expect a recession very, very soon. So all I can say is we watch this very closely. Now, one thing to note is that, is there any form of front running, or we look at Kelong in Singapore? Kelong means like you basically, it's like a, you know the result or try to make the result. So apparently before the data came out, CPI data, my goodness, apparently there was a surge, okay? There was a huge surge of prices. Let's take a look. Just minutes before the BLS released the CPI data, the US Treasury futures saw relatively heavy volume. Wow, look at it. Look at the volume. Oh my God. It was like 5-6 times just before the last few transactions. So someone or something has spiked this. Come on, guys. It's supposed not to be there. So the thing is this, about 5,000 contracts were traded over a 60-second period just before the release. And we all know that after the release came out, right, the market just shot up all the way. And those who bought it ahead will have profited. And the crazy part of this, the market later on came back down all the way. Oh my God. And look at the volume, the way it declined. This is very clear market manipulation, if not front running, very clear. But of course, the BLS, the Bureau of Labor Statistics, says that there's no evidence in the system that was compromised, there was no leak, blah, 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 blah. All I can say this, come on now, let's face it. This is not the first time we say this, and it's getting more and more regular. So all I can say this, guys, this is really, oh gosh, this is something that you have to think about it, okay? Anyway, sharing with you. Now, One thing is that Warren Buffett has cut more BYD. Wow, interesting. Now, Warren Buffett, all right, from Berkshire Hathaway, has basically cut stake in Chinese EV BYD for the 10th time, all right, selling 2.48 million shares for 69 million. Does he need $69 million? Well, apparently, this has basically brought their holding down to only 10.9%. Wow, okay. Now, FYI, when Warren Buffett first time bought BYD, it was only at 8 Hong Kong dollar. So, of course, now it's priced at now at 200, to take profit seemingly is a good idea. But the real reason, what's that? So we all can only know that he has been selling, and the stock has went up by 6-fold in the last 2 years. Incredible. So the thing is this, interesting. According to this Wang Chen from the partner of Xu Funds, okay, all right. Right, says that the main reason is because the stock has risen too much and has overshot industry and corporate fundamentals. I mean, yes, maybe, but I really don't think so, right? Because Citigroup just gave a buy call recently. Okay, so why is this Warren Buffett is better than Citigroup, or Citigroup is not getting the memo right? Now, the thing is this, I am not comfortable with this move because we all know that Warren Buffett sold TSCM shares way before the recent China and Taiwan thingy, right? Remember that? So this guy he's a visionary. He can see things further. So to me, it's all by selling BYD. I don't think that because he needs that money back. And look at the share price itself. Let's take a look. The share price went to as high as 360 at one stage. But I just saw the statistics, right? Overall, he sold quite a bit at 270. That was somewhere around here. And then after that, progressively, he's been selling between 270 to 190, all right, around this area here. So now the thing is this share price itself, right, now he's selling more at this point. I don't think that it's just profit taking. I mean, seriously, for Warren Buffett, do you think so? The chart don't look good. The chart, in fact, looks terrible. It looks like there's more downside to go. That's going to hit 223 or even 200 in the near term. All right. So I think that you should avoid buying this share, because you should know that when this Akong is trying to sell, he don't sell just only because of profit taking. I think he's selling because of other reasons, and you should be very careful on that. So be careful on EV side. That's what I've been saying to you guys. And that's why I'm not very optimistic with Tesla right now. Okay, now the thing is, while we are looking at all these numbers now, you notice that the liability and capital, the US Treasury General accounts shows that we are at a very critical level right now. Let's take a look. The level now we are is this point, and the last time we saw this was back in 2022, last year, and then next was 2019 and 2017. So in short itself, right, that means from the way the US spend their money, probably they left about 2 to 3 months. That means like what Janet Yellen say, by June itself, they will run out of money. Now, of course, as usual likelihood, they will come in and say, you know what, we need more money, let's raise the debt ceiling, and might as well just remove that ceiling away. I don't know. The thing is this, the Congress is pretty split between the Democrats and Republican. So all I can say is that we just hope for the best, because now the federal budget deficit has hit 1.1 trillion in just under 6 months. This is really ridiculous. Of course, Yellen is still saying that the economy is good, no need to worry, but come on, people are suffering. That's what I mentioned yesterday in my MAO. So all I can say is, guys, the Federal Reserve is really expecting a recession. Now, it's going to be mild according to them, because they think that they don't expect a big one coming in. But of course, you must understand, of course, they will tell you a mild one. Who will tell you a big one coming in? If you imagine they tell you the big one coming in, I think the market will freak out, okay? So all I can say is this. Let's take a look right now. The latest data shows that the US banking crisis has going to tilt the economy into recession. And this is something that was mentioned in the Fed's minutes. So let's look at what Steve had to say regarding about this. Let's bring Steve in right now. Let's go, Steve.
The Federal Reserve's meeting in March showed that the staff says the effects of the banking turmoil would likely lead to a mild recession later this year. They saw the recovery from that recession in 2024 and 2025. The staff had previously seen the recession as a possible alternative to its baseline forecast. Now it seems to have elevated that to the baseline forecast. Staff had previously, staff expects inflation to step down markedly this year and slow sharply next year. We usually don't begin with staff, but this is a pretty big change right now in the forecast for the staff. It says the forecast is tied to the banking conditions, which are uncertain. It also says the Fed officials themselves in the meeting saw banking turmoil likely leading to tighter credit conditions, and it saw banking turmoil likely weighing on growth, jobs, and inflation. The outcome of these banking failures and stresses of the banking system were seen as uncertain during the meeting. The banking problems were seen as limited by most participants, however, and they did factor into policy, and they would factor into policy, they said, if they affect jobs, inflation, and growth. Some officials would have hiked 50 basis points if not for the banking stresses. And in the absence of the banking stresses, Fed officials would have raised with the outlook for the funds rate as well. And it caused them to lower the outlook for the future funds rate. Economic risk were weighted to the downside, inflation risk weighted to the upside. One more thing here, participants also saw the labor market is very tight, wages were slowing only gradually, and inflation was seen as unacceptably high.
All right, so you can hear very clearly that what Steve had to say is that the numbers are showing pretty clear that there's a very good chance we could see a mild recession. And if you remember this, I actually mentioned that there would be a recession coming in officially by August, September period, and seemingly it's spot on, guys. So all these are on my MAO video. So share, if you have missed all this video, you can actually look at it. And in fact, rising food prices should be one of the biggest problems later with high employment coming in. All right. So why am I bullish with crude oil? Let me explain this to you with a very simple analogy here. Now, recently, we all know that Jennifer Granholm says that the purchases of buying back the crude oil for the White House are going to start soon, right? The thing is that because of what happened in recently OPEC plus what they said. So she came in and said that they will buy back. Then after that, today, she says that if the price goes to 67, 72, she will buy in and do all the replacement and replenishment. But the thing is this, that's if only the price goes back down. My goodness. The thing is, I'm not too sure what you're going to do, but she tell people that she's going to replenish it, but apparently the numbers are not showing. Look at it. The Biden administration actually drained the SPR for the second week in a row. Yes, recently, by 1.6 million barrels, right, instead. So rather than replenishing it, they actually drain it further. This is real numbers, come on, from the EIA itself. So all I can tell you this, if they really want to replenish this, they have to do a lot of things because the numbers show that they are not doing that at all. And all I can say this is the moment they start to do that, while the price is so high right now, you cannot imagine how high it will go. And that's the reason why I'm so bullish in crude oil. So that's why since a month ago, I already said that the crude oil will hit $96. And I'm reiterating this because I suspect the interest rate will go much higher than the 5.5. Because think about this, once the crude oil price goes up, it will hit across the board, which means that the cost will increase. This is something that you must understand. This is something very, very scary here itself, because the CPI data actually got one part that is, I think probably I missed out this. The CPI data is right. One part of it is that only, okay, the used is going to shout the used car and the energy price level that went down. Okay, the remaining itself was high or at the same level. So think about this. If the thing is the crude oil price goes higher, the energy sector will go back up again, all right? And then that will spread across the cost for everything. And that's why I believe that we will see more selling in the economy. And that's why crude oil price will just keep on going higher. So this is nothing right now. You can see it right here. This is the reason why you can see that the reason why the CPI data came off a little bit is because of this. The number from the energy commodities, gasoline, it came down quite a fair bit, right? So that pushed the thing downwards. And of course, the used car also pushed downwards. And that's the reason why the CPI data came off. But if you look this carefully, the food prices has went up. You can see that so the energy in terms of the electricity has went up. And of course, the transportation has went up, guys. So imagine if this sector called the energy goes up instead, what will happen to food prices? What will happen to the transportation costs? What will happen to electricity bills? I can tell you this, all is going to go up. So mark my word itself, $96 per barrel is coming in as long as, okay, the market try to hold it up, because the only argument that can bring the oil down is there's a recession coming in. But in order for that to happen, I believe that oil has to go up first. All right, so all this information tells me that now we are at a very critical level. We're going to see the crude oil now testing the 200-day moving average. And we have noticed that you look back again, right, since last month, March month, February, January, December, my goodness, that was a period whereby the White House has been draining the SPR to bring down inflation. But today itself, we are much higher than the last 4 or 5 months combined. So which means that we are now, you have a very, very important cross junction right now. If the crude oil get resisted and pull back, okay, that's not too bad. I suspect that it may go back to $78 because that's a FIBO level. But if it doesn't and breaks above the 200-day moving average, my goodness, we're going to see $96. Now, do note, back then itself, when crude oil price was one of the factors that brought the inflation into the picture, Biden went to this Saudi Arabia to talk to the Saudi prince, and you know that what happened, right? It was a very cold treatment, but eventually they accepted it in a way, and that's why they allowed the price to go down. But the thing is this, recently you can see from the prince himself, he said it's no longer pleasing the US. And why? Because when they allowed the US crude oil to go down to about $64 recently, they didn't buy back. The White House didn't buy back. So if they didn't do it itself, to me, it's I am surviving based on this because of goodwill. I bring the price down to let you do what you want. But when you actually don't do it, come on, man, I'm not going to buy it. And that's why when it was at $74, they announced, the OPEC Plus said that they're going to cut production, and bang, that's where the crude oil price goes up. And I mentioned to you guys this, that most likely the crude oil price will go higher very soon, right? Because this is not an event. This is actually a cut of production. So which means that the supply is reduced while demand is there. So that is why price will go higher. So that is the reason why I'm pretty confident that $96 is going to come in. And thank you, Biden, once again, for the great deal you've done. All right, guys, hope you enjoyed this video. Leave a comment. Let me know what's your feel. I'll see you on the technical side. This is Kel signing off. Bye-bye.